deflation is here again for the first time since 2020.
We just got deflation for the first time since 2020. And yes, I mean deflation, not disinflation. And this is also going to have an impact on your portfolio. This chart right here is a chart of month over month price changes. So anytime you have one of these blue bars above the zero line with a positive number, that's how much prices changed on average from 1 month to the next. For instance, in January of this year, prices increased 0.5% from the month prior. You can see the last time this number was negative was in 2020. March of 2020, prices fell 0.5% from February to March. And then April of 2020, prices fell 0.8% from March to April. And then May of 2020, prices fell 0.1% from April to May of 2020. Since then, we have had a few months where the CPI registered zero change in prices, but March of 2025 was the first month where we have had price decreases. This is different than disinflation.
So I want to go back for just a moment here. So Ferdinand, one thing that's been driving me crazy was, especially during this time frame over here, right? The right-hand side of that giant peak, was so many people were like, oh my God, inflation's over. We fixed it, especially when the previous administration was in office, right? This was still 2022, 2023 timeframe. Everybody was like, oh my God, we solved inflation. Everything's awesome, right? But the problem here, Ferdinand, is that this is month over month inflation, right? Month over month, meaning that it's cumulative, right? So if we had, where's my little cursor? If we had 0.4 on this month, and then another 0.4 on this month, and then another 0.3 on this month, and then another 0.2 on this month, and then another 0.1 on this month, right? That means that prices looked like this, right? If this was the chart here, prices look like this, right? The entire time, right? Because at no point in this period did prices come down. And it continued up higher and higher and higher, right? And then at this point over here, when the disinflation started, that just means that the slope of this curve, the slope of this was not as steep. And so people were saying, we fixed inflation, we solved inflation. I think that was a headline for a while. We solved inflation. But if we look at a cumulative inflation chart, now I'm not 100% sure that this particular one is going to show what I want to see, but let's see. No, hang on. Hold tight real quick. Right there. Yeah. No, I don't know. I want more granular. Cumulative inflation. 2020. Hang on, I'm going to find a good chart right here. This is one that I've been looking for right there. Right. When we look at this, let's make this more bigger here. Open image in new tab. There we go. That's more bigger enough. Looking at this, right? So the periodic month over month inflation continued to stack period over period, right? And so while the curve, we can see right here, the shape of the curve is not as violent, right? Not as violent in the up move, because it's more like this direction now. It's still going up. It's still going up. And that's why egg prices are like $64 a dozen, right? Is it like that out where you live?
Yeah. Oh, trust me, I hear it with well, I mean, we don't really, my wife will just say, you know, the prices have gone up, but it's like, I look at it as like, if things go up, it's like, that's points that I can get on my credit card. So I'm like, let's stack it up. Let's get more points.
Okay, that's a funny way to look at it. I hadn't thought of that before. I tell people all the time, my wife cares nothing about money. As long as the card swipes, that's all she cares about.
Right. That's pretty much it. I just look at the point accumulation, and I'm like, okay, let's get more points. What can we spend more on? Let's do this.
Right.
You know, honestly, this last, like, I think 2 weeks, man. I've had some hits with some of my decisions that I've made. So I've been trying to regain what I lost, but that's just the name of the game.
Yeah. Fun. You know, I was at Trader Joe's on Sunday, and we always go to Trader Joe's while my kids are in Sunday school, because we have mass first and then Sunday school's right after, and then we pick them up and we go to brunch afterward, right? That's our normal routine. So I'm at Trader Joe's, and the cashier next to me looks at this family who's got, you know, nothing crazy, but they have 3 dozen eggs, if you can believe that. 3 dozen eggs that they're trying to check out with. And the cashier at Trader Joe's was like, did you not see all the signs back there? Right? There are tons of signs. You can have 1 dozen eggs per household. and it was like a lady and her 2 adult daughters, and they were like, well, we live in 3 different households. Does that count? And he's like, no, you're going to have to go through the line 3 times. What? It's for freaking eggs. Give me a break here, dude. Somebody was on a power trip about eggs.
Yeah, he was. That was what, Trader Joe's finest right there. I mean,
Yeah, right. Oh man,
it was
but
maybe some guy that having a bad day that's trying. Who knows? It's a story behind every face. You never know that guy's. But you encounter those people, you just kind of got to ignore it. But that's crazy. That only one. That's like the toilet paper thing that we went through in COVID. Wow.
What are people going to do for Easter? What are we going to do for Easter, right? If nobody can dye their eggs, what is the Easter bunny going to do?
That's nuts, dude. I didn't know that. So is that everywhere?
I don't know. I don't do enough egg shopping to tell you.
Yeah, I wouldn't know. I'm definitely going to look at the comments to see if anybody in the comments is saying anything about the eggs.
Let's see. Oh, they're talking about how smart you are, right? Getting paying off your credit card right away to get those extra points. That's real smart.
Oh, yeah. I just actually I was talking to Apple Card the other day or yesterday morning, and I'm like, my balance wasn't updated. And they're like, well, you kind of made a large payment, so it takes time for that to show to your account, and you can use Apple Cash. The best way is to like transfer money to your Apple Cash from your bank and then pay it from your Apple Cash, and then it updates automatically. So if people don't know that, if you're paying your Apple Card, try to transfer money to your Apple Cash from your bank, then your balance will update immediately instead of going through like a 7 to 10 day verification process through your bank. But I sent in like a $8,000 payment, and they said that was a little large. I'm like,
don't you know who I am?
No.
Give me a break here.
I just want my bill. I just want to make sure everything's paid. So
yeah, dude,
I do that all the time.
I know what you're talking about, right? Like I just had to. So I rolled over my IRA to a different broker, and I had to send a paper check in the mail. And I was like, oh my gosh, I do not want to send it. Why can't I just wire transfer this? This sucks. So I called them yesterday, and I'm like, did you guys get the paper check that I mailed? And they're like, yeah, we got it. It's like, God, thank you. Thank Jesus, right? So stupid. Okay. Back to the topic of eggs here. And somebody had the question, right? It's maybe it wasn't a question, but it was something about eroding buying power, right? And so the month over month changes don't seem like all that much, but when it's cumulative, right, it becomes a whole buttload, and that's why everything costs so much more than it did just a few years ago. We've all experienced that. Nobody is immune to that. But first disinflation period in 5+ years, I gotta say, I'm kind of stoked about that. As a consumer, I'm kind of stoked about that.
Yeah.
But this isn't obviously taking into account any tariffs, right? Because I'm sure that will not look very good real quick when everything from China costs, when everything from China is so stupid. They should have made my deal years ago when I was president the first time, but now they're on the other end and they're going to pay me directly. They're going to write a check. It'll say Donald J. Trump. In the memo, they're going to put, you're a genius. Yes, they're going to pay me 145% on everything. I am so brilliant for having done this, right?
Love it.
I can only see that happening.
Oh my gosh, man. That was brilliant. Brilliant.
Okay, I want to learn more about this deflation here, because I'm all for it. Let's have some deflation.
5 was the first month where we have had price decreases. This is different than disinflation. Disinflation is prices still going up, but they're just going up at a slower pace. That'd almost be like if you're driving a car and you hit the brakes. You would be slowing down, but you're still moving forward. This would be like throwing the car in reverse and backing up a little bit. So right now, from February to March of 2025, on average, prices actually went down. Now, obviously, prices going down 0.1% is not really meaningful, especially considering the fact that things that people still care about buying are increasing in prices, like eggs. So why is this a big deal? Well, inflation numbers are one of the most important things that the Federal Reserve pays attention to when determining interest rates. When combating the inflation they unleashed from the trillions in printing in 2020, they raised rates extremely quickly and then held them steady through basically half of 2023 and all of 2024. Towards the end of 24, they did start to lower rates, but because that caused a resurgence in inflation and it caused interest rates on longer term bonds to actually go up in response to that expected inflation, they decided to stop lowering rates rates and hold steady for most of 2025. Now, year-over-year inflation is still positive. When you measure prices from March of 2024 until March of 2025, prices did still increase about 2.4%. But interestingly, that's the exact same place that the CPI was at in September of 2024, which is right when the Federal Reserve started cutting rates last time. Again, the CPI is one of the main things the Fed pays attention to when determining what to do with interest rates. And with year-over-year inflation back into a zone that they like and looking like it's headed lower, and month-over-month inflation actually negative for the first time since 2020, this means that the Federal Reserve does not have the excuse that they've had for at least the last couple of months to hold interest rates steady, especially if you start seeing problems appear in the job market, if you see problems appear in the stock market, if you see problems appear in the bond market, if you see numbers going the wrong way with GDP. Any of these potential catalysts, people could be looking at the Fed and saying, hey, you should be lowering interest rates. And with the inflation numbers looking the way they're looking right now, they will not have the excuse to say, we can't lower rates because inflation is just too high.
So one thing that I like to show is called the CME Fed Watch tool. This is really cool, Ferdinand. So when I used to do consulting with financial institutions, one of the things that they would always ask me is like, they're like, Chris, what do you think interest rates are going to be over the next 6 months? I'd be like, I have no idea. How am I supposed to know? I'm not Jerome Powell, right? But people way smarter than me created this tool called the CME Fed Watch tool. So it shows you what today's rate is, 4.25, 4.50 on the Fed funds. But it also will show you the market projections. So if it's April right now, let's go 6 months out in the future to October. Would you believe there is a less than 1% chance rates will be the same as what they are today? Less than 1%. Basically a 93% chance, 93% chance they'll be at least 50 basis points lower.
Well, that would be good news. I
Dude,
mean,
for sure.
let's hope that like takes shape. How reliable is this that you've seen?
So it's taken into account the futures market for this, but making it like as easy as possible to read, right? And that's why I like to read this. One thing that I have been thinking for a while is I think that the market, just our economy in general, has built its legs on low interest rates. Like, for example, when my parents bought their house in the 80s, they paid like, I think they told me 13% interest rates. Our real estate would come to absolute screeching zero sales if we had to pay 13% interest rates. So I think we're built, just generationally on these ultra low interest rates.
Yeah. Yeah, I would have to agree with you on that. I think that is kind of the so like that's their MO, isn't it? I mean, that's how they're going to make their money. I mean, at the end of the day, that's when I look at it, it's like when someone's handing out a loan, they've got to make that money back. So the ROI on that, so it kind of just rolls through us. But I think in the 80s, like you said, that's my parents, interest rates were high. Like that was typical. That was what you were expected. I think they were even higher than 13%, if I can remember correctly.
Yeah, I've heard some people tell me in the comments that they've seen 18% when they were
Yeah,
buying their house.
I could have sworn it was like 18, somewhere up in the 18s.
Yeah.
So and could you imagine? Imagine someone having an 18%. Could you imagine?
No. Dude, and like just thinking of since COVID, right? So I bought my house in 2016, and since then the market value's doubled and the interest rates have nearly tripled. And it's like, if I were to buy my house today, my mortgage payment would be 4 times higher than what it was in 2016.
It's
And I'm like, the buyer pool is so much smaller than it ever could be, because how many people can afford a mortgage 4 times higher than what I'm paying now?
well, that's why
Dude, my mortgage is less than my housekeeper's rent. Isn't that crazy? My housekeeper comes in and we were talking one day and she's like, oh yeah, I paid this much every month. And I'm like, that's more than I pay for my mortgage. And she's like, that is so messed up. And it is messed up, right? It's totally messed up.
I mean, it's so backwards when you think about it. I mean, I get what you're saying, because we've been discussing about investing in real estate, and these interest rates, and then you're at the mercy of who you're going to be bidding against. And if it's a big company, which is smart, I mean, I get it. I get these companies are coming in, they're grabbing up everything. It makes sense on a business perspective, but on a human perspective, it's like you're just pushing people out. I mean, I hear of so many people that are like, we go in to buy, we just get bid out because it's being they 80,000, $100,000 over that they're just like, we just don't have that to put in. So who would? Corporations.
Yeah.
And who's beyond corporations? People on the board. So they're sitting there and they're thinking about how can we, so it's good for business, but it sucks for humans. It really takes out that human perspective, because then you look at people like your housekeeper. It's like, is that really fair? At the end of the day, is that really fair? But then you look at the other end of that spectrum, and that's controlled by interest rates. So it's everything kind of boils into this. So it's a weird time right now, man. Like, it's like I was expecting when this administration, when they came in, I was expecting to go a whole different way. I really was. I thought things were going to go a whole different way. I have yet to have good conversations with my family with my vote. So, but I'm keeping the faith, because I see there's got to be something that's going on. And if you're saying you're depending on, and that's a pretty reliable tool, and the interest is going to go down, then I think people are going to be happy. And with any change, you're going to go through some serious, disruption. And I think we're seeing some disruption right now. And I think hopefully there's something greener on the other side of this. Hopefully.
Yeah. And usually when the Fed lowers rates, it's because they need to stimulate the economy, right?
Mhm.
And so if they have to lower rates to stimulate the economy, basically they're saying things are not going to be looking great in the next 6 months. Right? I mean, in theory, that's exactly what they're trying to tell you here is if things were great, we wouldn't have to lower rates. But I'm not so sure it's looking so great.
There's so many, I was talking to you before this, there's so many different walks of life that you deal with, and then you see, and then you're looking at like what certain people are going through and what other people aren't going through. And it's like, there's some serious issues going on right now that, are hitting Americans. Like, there's some serious stuff that's going on behind the scenes. It's not hitting me, personally, but from what I'm hearing, there's some stuff going on. So I think we're in something, I think something's going on. So they're going to have to lower the rates. You cannot keep going at this pace. It's what, like you said, the eggs, how many people can afford that if they don't have that income? Like, think of the seniors, like that. This is, you gotta, the human perspective has to come in at some point,
Yeah. Well, I got to tell you one thing that I love the idea of lowering prices with deflation, which in theory is better than disinflation. So to go back to that chart earlier, disinflation meaning that the rate of acceleration has slowed, right? We talked about, I don't have that here, on this chart earlier. Disinflation meaning that it's no longer increasing as fast. It's still increasing, but just not as fast. But deflation, as great as that sounds, right? That could actually turn into a really bad situation. Think about it this way, right? Let's say that prices start coming down and you're like, well, I'm not going to go buy a new car, right? Oh, okay. Let's say you're a fancy guy. Let's say that you're like, I need a new Lambo. Let's say you need a new Lambo and you're looking at the Lambo market and you're like, 425 for a new, I don't know, Gallardo. I don't even know what Lambo models there are.
Depends on the spec.
Okay, there you go. Let's say it's 425 for a new one. And you're like, why would I do that? Why would I pay 425 when a couple weeks ago it was 450, right? And now they're lower in the price. And you're like, I don't have to buy right now. I mean, I could just hang out for a little bit. And then it comes down to 400. And you're like, if they've already lowered it this much, let's just see how much further it's going to go.
Yeah.
Then,
Right.
in order to capture customers, they have to lower it and lower. And it's the same with housing. It's the same with washing machines. It's the same with everything, right? I'm just using an example. And prices keep coming down. And you as a consumer, you're a savvy consumer. And you're like, I'm not going to pay extra for this. If I can wait it out a couple more weeks, couple more months, it's going to cost less. I'm good for it. The problem here is that in order to sell these products, they're dropping their prices. You as a consumer are still not buying. And you're like, you've dug a hole. I'm not going to go anywhere. they're screaming, we need to sell something just to pay our employees. And then you're like, I don't care. I'm still going to pay it if you're going to lower the price some more. And then they're having to lay off people because they can't make sales on these items. And so deflation starts out great, but turns into a huge mess down the line. It's called like a deflationary spiral. And I'm not here for that. I want prices to go back to what they were, but I'm not here for a deflationary spiral.
You're right. Yeah, I'm with you on that, man. It's even in the the supercar world right now, I'm seeing a lot of people pull back, or it's going into more of higher spec, higher investment, to where it's something that's more rare, like something that's one in like 450 that's made. But yeah, the market's even for watches, and like everything's changing right now. Everything's changing. I had to liquidate some things the other day, or a few weeks ago or months ago. And when you go and you buy something and you're like, okay, this is going to hold its value, this is going to be good, maybe 2 years, 3 years down the line, this is going to be a good investment. I will advise everybody that's watching this, don't do watches. Do not do watches. I mean, unless it's a Patek, but you're going to lose. You're just going to lose. It's not something that that's just my personal experience. I wouldn't go into investing into watches just from my own personal experience. If that was anybody that's watching this right now, just enjoy it. Like my jeweler said, he was like, you had so much fun with it though. And I'm like, you don't have fun with a watch. Like, you don't have fun with a watch. You just wear it like it's not fun.
Yeah.
But yeah, it's right now, it's just such I don't want to say volatile. I don't know what to call it right now. It's just odd. It's odd. It's very odd with everything, with buying of houses. Like, that's one thing that I'm really, really having an issue with this whole purchasing of houses, because we're looking to buy some real estate, and you get bid out no matter where you go, no matter what. Like, these corps are killing you, no matter how much of a dream you have. If you write a letter, like, they're killing you. They're just taking everything from, and we're one story. Think of how many other people this is happening to. And that's the housing market. And then you're going to the groceries with the eggs. Something drastic is happening right now. I just think that we aren't seeing it, or maybe it's not being said, or maybe in this video he's mentioning something that we will see. But it's something is going down. Hopefully, I'm hoping what you said with this chart is true, because things are hemorrhaging at some point. Some of my partners, it's not fun for some people right now. So
yeah,
these rates need to go down. And the tariffs are killing everybody. That's a whole nother thing.
So speaking of things that are fun, have you been over? I'm totally going to segue right now. Have you been over to OVTLYRdeal.com?
Yes. Oh yeah.
You've been over to OVTLYRdeal.com. Did you hear about this? Right, we're giving away $1,000 and a full year of OVTLYR 3.0 for free. Right, all you got to do is put in your name and email. Dude, can you believe we already have 8,000 people who have done this?
Whoa.
Isn't that cool?
I was just gonna say, dude, I did not even. That's crazy. You
I
guys,
know.
look at you. That's all you guys. Everybody in the chat, I'm sure you guys are doing this. So you guys rock.
I know. So grand prize, $1,000 and a year of OVTLYR 3.0 on us. First runner up gets $200 of merch, right, including my hat. Not my actual hat. Listen, I only have about 40% of my hairs left. So the ones that are stuck in here, you can't have. I need those. I don't know what kind of DNA samples you're going to take from me. You're not getting my actual hat. But you will get my 5 favorite trading book bundle. And second runner up still gets $150 worth of merch and my 5 favorite trading book bundle. So be sure you head on over to OVTLYRdeal.com. And some of these you can actually do more than once. Some of these you can still get entries every day. Like visit the Instagram profile, visit OVTLYR.com, go visit our YouTube channels, watch a YouTube video, right? We have other ways that you can continue to get these entries almost every day. So I want to make sure that everybody has a chance to go to OVTLYRdeal.com so they can be entered to win. So let's get back to this video here. That wasn't a decent segue. I had to push that out there, make sure everybody signs up.
I'm so excited, man. I'm really excited for this.
excuse to say we can't lower rates because inflation is just too high. Now, we're already starting to see cracks appear in the bond market. I made a video about this already. Go back and watch it if you haven't. But the 10-year US Treasury yield has been skyrocketing recently because of liquidity problems, an unwind in the basis trade, and hedge funds getting liquidated. This
Okay. I want to go back to this. I talked specifically about this the other day. People are saying how problematic this is. Bond yields are going out of control. Ferdinand, do you see something on the chart that tells you things are out of control? Because to me, what this says is this is normal. I mean, this is the same rate that it was in, I guess, March, the same rate that it was in February, the same rate that it was at this point in February. Why are we freaking out about this? I know bonds aren't your specialty, and they're certainly not mine. I'm out of my lane on bonds, but I'm looking at this like what the deal is.
Yeah, just looking at the chart, that just brings like you've got the support back in, so it's kind of balancing everything. You're gonna have your dips. This looks normal to me. Do you want it to keep going down? I mean, you got to balance somehow. So I would
like it's almost like a media narrative that they need something to talk about. So they're like, bond yields are going crazy. Are they?
It's a balance. I mean, look at that. So you want it to keep going. So if that line keeps going down, let's take that line and you shift it and you move it all the way down and then you'd be happy. Like, is that what we're supposed to be? Like, we're balancing everything out. So I think it's, to me, this is what a chart should look like. If you have a massive dip, if you don't get back support, you're lost. You're done. It's gone, completely gone.
Yeah, this is just something that I can't get behind, saying that there's issues out here. But maybe, I mean, this is not my wheelhouse. I'll be very honest with that. Bonds are not my wheelhouse. So let's see what he has to say here.
Recently because of liquidity problems, an unwind in the basis trade, and hedge funds getting liquidated. This lack of liquidity would be solved by the Federal Reserve lowering the federal funds rate. We've also very obviously been seeing cracks appear in the stock market with wild swings in stock market prices that rival some of the biggest crashes in history, like the Great Depression. And the Federal Reserve lowering interest rates here would be very bullish for asset prices. If we go back in time a bit to 2018, the stock market was crashing towards the end of 2018 when the Federal Reserve was tightening. President Trump put a ton of pressure on the Fed, and because the inflation numbers weren't there, they didn't have any excuse to keep on tightening. They reversed course, started easing, and that sent the stock market soaring again. You can see here, the federal funds rate right at the end of 2018 was when they stopped raising interest rates. And so with all of the risks popping up everywhere in the stock market, the bond market, the real estate market, trade war, GDP, and now the main reason the Fed tightens suddenly starting to turn around, it seems like it is only a matter of time before the Federal Reserve starts easing again, lowering interest rates, which would be very bullish for risk assets like stocks. The stock market is already down more than 20% from top to bottom, which means this is a bear market, and bear markets do not happen very often. And when they do, if you don't take advantage of them by buying the best stocks in the world at discounted prices, you end up kicking yourself for years to come, hoping that you catch the next drawdown. Don't let that be you. And if you don't know what to buy and don't know when to buy it,
he's about to pitch his masterclass. I'm telling you, we're going to skip the masterclass pitch. But what I do want to talk about is, Ferdinand, if stocks are sold off like this, right? If they're crashing down, that is absolutely a buying opportunity when they stop crashing. When they start crashing back up rather than crashing down, because we don't know how far they're going to go. We have no idea how far down they're going to go. But I'll tell you, Ferdinand, I have developed something. And for only $997, I will tell you the secret, the secret to knowing exactly when the bear market's over. Are you ready?
I'm ready.
Okay. This secret is so secret, only a very select few people have ever heard of it. It's called the OVTLYR trend template. Now, don't tell anybody about this, all right? You got to keep it between you and me.
All right.
And, the thousands of people are going to watch this, but between you and me, when the 10 exponential moving averages move faster than simple moving averages. So when the 10 EMA crosses over the 20 EMA and price crosses over the 50 EMA, that, my friend, is when the bear market could be over and could be a solid opportunity, because that means your short term is now higher in price than your intermediate term, and prices are now higher than the longer term. So by stacking these together, bada bing, bada boom, you got a bull market on your hands. But Jonathan has a great point. Jonathan has probably the best point of everything. It's just one tweet away from glory or destruction, right? I've been telling people this for a while. I think Donald Trump is sitting on his golden throne, aka the toilet, with his phone, and he's like, I rule the entire economy from my toilet. It is the most amazing toilet. It's so much better than Joe Biden's toilet. This is the most tremendous toilet of all time because I have made a gazillion dollars, a Brazilian dollars, probably a Brazilian dollars in profits. Yes, because of this incredible toilet that I get to sit on. Only my ass gets to touch this particular golden toilet. But in all reality, right? Everything is up to him at the moment. He controls the world economy. And I don't mean to be like, oh, Donald Trump's amazing. He controls the world economy. I'm being very practical here. Everything is moving based on what his two thumbs can type.
Yes, you're right. You're right. He has a massive control. And it's funny when we were watching that chart, it didn't dawn on me that. So right now with the stock market going down, when we have these little dips in the stock market, crypto starts to go crazy. So you have things on the flip side where people in crypto are starting to buy because it's quick flips, and then they go and they put money back in the. So I think what he's talking about in the video, what you showed in that chart, I think we're getting ready to see the Feds kind of say, okay, we got to do what we got to do. We have to drop we got to drop them, because it's going to feed more into people. But it's going to stabilize everything. And that's what I think we need. And just thinking on a business perspective, if Trump's saying that we're going to be the Americans are going to be like the most power, we're going to have this massive, powerful economy and everything. They've done a lot of, like think about going into a business and you're seeing a lot of waste, and you go in there and you kind of fix things. It's not comfortable. It's not comfortable in the very first 6 months or say that you've got some, maybe let's say a financial team that comes in, forensically goes through everything. But when things get cleaned up, there's kind of like a brighter day. So that's what I could be completely wrong. And by God, call me out if I am, but I hope something like a brighter day is on the flip side of this. That's what I'm hoping for. That's all I could see with what's happening. But I'm not Cleo the psychic, so I can't.
The psychic in years. I was just thinking about her late night infomercials, and didn't she have like a Jamaican accent or something?
Oh yeah, man, like Dionne Warwick.
Oh yeah, call me 1-900-684. I tell you everything, right? Terrible Jamaican accent. I don't know what I'm doing. Actually, that was a tremendous Jamaican accent. It was the most Jamaican accent of all time. Hillary would be incredibly jealous of that Jamaican accent.
I love it.
Listen, Ferdinand, I'm really stoked that you came today. I'm stoked that we might see some deflation. Like I think this has been a great chat. Thanks so much for coming on today.
Yeah, thank you, man. Thanks for everybody for being here. We appreciate everybody.
Absolutely. And y'all be sure to click one of the recommended videos that YouTube is popping up right now. And I'll see you in this afternoon's live stream. We'll talk soon.